Welcome back to the Milwaukee Real Estate Market Update. We're covering what happened in August 2022 and how that's going to impact your real estate decisions. I'm Ty Ash with Houseworks Collective and Compass, your local real estate expert. First, we're going to dive into current events and how that might impact us here locally in Milwaukee. We're going to start with the national housing numbers according to Fred. 779,000 homes for sale versus 747,000 homes last month. That's a 4% increase month over month. Compare this to 615,000 in August a year ago, or up 26%. Of course, we're seeing a little bit of inventory on the rise, nationally speaking, but for some historical context, we're still down right around 25% in inventory compared to February 2020, right before that hot real estate market really kicked off and got even hotter during the COVID pandemic. This is all, a little bit of a different narrative, different story as we focus a little bit more on our local market here in Milwaukee. Our active listings are down 10% versus a year ago and down 17% month over month. So just not enough homes still coming in to meet the buyer demand that we have in the Milwaukee Greater Area. Moving up next, we've got our inflation update from the U.S. Bureau of Labor Statistics. So this was just released today at the time of filming. U.S. consumer prices climbed 8.3% in August compared to a year ago. They're just a little bit higher than our expectations. The biggest driver versus a year ago continues to be energy, up 23% to last year, but we're still seeing higher year-over-year increases in food prices, as well as all other items less food and energy. Very quickly, some extra info on these major categories that I have pulled up on the chart here. Food prices increased 11% versus August a year ago. Energy category increased 23%, as I mentioned already. And finally, all items less food and energy rose 6% versus last year. Once again, from the Fred website, just a really great data resource for all of you. We have our interest rate update. So well-qualified buyers are locking in around 6% interest rates on average versus less than 3% a year ago. Based on the news that we kind of just covered on inflation, that is still maintaining levels above 8%, the expectations are that the Fed is going to continue to raise rates, and most likely by 75 basis points or 0.75%. However, do keep in mind the mortgage interest rates are a little bit more closely related to the 10-year Treasury as opposed to the interest rate hikes that we're hearing each time from the Fed. I actually have this chart here for your reference as well, and you can kind of see those trend lines matching up as time goes on. Now, take my first pause here. What other national headlines are you looking for information on? These are some of the big things that I know that everyone wants updates on: the housing stats, inflation, what interest rate can I get? But ask me in the comments below, what would you like my take on in terms of current events? Otherwise, now we'll dive into our local market here in Milwaukee. This data obtained through our local MLS information. Starting with our single-family homes in Milwaukee County. So, sold listings, 786 homes, down 15% to last year, and last month being down 21%. So we're seeing a little bit of sales decline on a unit basis. But as we move on into our active listings, 1,052 homes, down 10% to a year ago, and down 17% month over month. Now, what we've continued to see is about a 5% spread in our sold listings and our active listings percent decrease year over year. This is going to be an indicator that our months of supply will increase. However, if we use one more stat here of August new listings, those are down 27% compared to a year ago. So we're just not replacing the inventory at a fast enough rate. This leads us into our next stat of months of supply. In August 2022, we're sitting at 1.4 months in Milwaukee County versus 1.5 months last year. Actually, a slight decrease, even with the slighter slowdown in sales. Then moving on to our median days on market, it's the same narrative that we've been sharing for months here. 6 days on market versus 5 days a year ago. We are still seeing that it's the norm, that most homes that are listed are receiving an accepted offer within their first week on market. And finally, with all of these stats rolled together, again, inventory decreasing, not seeing as many new listings coming up, still relatively strong buyer demand. We now have a median sales price of $237,200, which is up 5% to last year. Still seeing the values of homes go up. Values are still increasing. There's definitely some headwinds, especially as we expect interest rates to continue to impact the affordability. Now making a pivot for the investors out there curious to know what's going on in the two-family or duplex space in Milwaukee County. Sold listings, 177 properties, down 17% to last year. However, active listings even down further, 367 homes, down 48% to a year ago. Very much inventory constrained in this investment space. And we can see that here in our months of supply, 1.9 months versus 4.2 months a year ago. I didn't mention up above in the single family space, but what we would love to see to be inching closer to more of a balanced buyer sell market is 6 months of supply. So still a third of the amount of the inventory that we really need to support the sales that we are still seeing here in the Milwaukee County area. Moving on to median days on market, this investment space is seeing 11 days, same as a year ago. So again, usually within the first week or two, we're seeing accepted offers coming through on the investment space. What's likely driving this a little bit higher than single family space is sometimes you've got that deferred maintenance projects that are needing to be done in the investment space as opposed to your single family homes. And then last, our median sales price, $205,000, up 14% to a year ago. And compare that to last month where we were sitting at $187,500. We actually saw a year-over-year decrease in home values in the month of July. We covered that last month. It was a little bit to do with the mix of sales, specifically homes less than $200,000, making up a larger percentage of the sales in the investment space. So good to see values still holding steady, if not increasing here in our two-family space. Now, I want to take another quick break. Let's take a breather. Have I missed anything that's important to you? Do you have a question about the stats that we're going through and why we're actually reviewing it? Why is this important to your real estate decision? Is there a national or local headline that you'd like me to take a deeper look at? I'm here to answer your questions, so please just put them down in the comments below. And of course, we've got these headlines. You've got my take. We've got our MLS statistics here from our local MLS. What does that mean for buyers? We're entering a window where months of supply may start to increase. We're still seeing them hold steady below 2 months of supply for sure. And this is somewhat being driven by lower buyer demand. Just as a stat, pre-approvals compared to a year ago fell about 23%. So a quarter of the amount of buyers are entering the market, but we're still seeing multiple offers out there and a lot of buyers still being obviously frustrated with multiple offers needing to be submitted before they get that accepted offer. But we do still have interest rates rising versus a year ago, almost double. We're also, continuing to see lower sentiment, almost, the lowest we've seen them in 30 to 40 years due to war, inflation concerns around coming recession. We're also quickly approaching the end of the year where seasonality in our Midwest market definitely is going to impact the months of supply and how long homes sit on the market. This should provide opportunity for buyers that are currently searching to get a home with a little bit less competition. It doesn't necessarily mean you're going to be the only one, but hopefully you're going to be able to get yourself a sweeter deal. Just a quick note, I know I've mentioned a couple times earlier, the housing affordability as of July 2022, this rating is sitting at a 102.2. And to give this some context, a value of 100 means that a family with a median income has exactly enough money to afford the median priced home in their area. So we're sitting at 102, not much above 100. This is a pretty steady decrease compared to where we started the year, close to about 140, I believe. So a biggest impact obviously coming from the interest rates. And also note This index includes people putting down 20% down versus the average percent down put down on a home is closer to 7%, which would obviously raise our monthly mortgage payments. So definitely an affordability problem out there that we're continuing to monitor. And next, my advice for our sellers out there and a debrief on what the stats mean. Here in the Milwaukee area, I would say Milwaukee sellers tune out the national headlines and consult with your local real estate expert. All of this data out there is super hyper local, even down to the neighborhood level. Your home has most likely not lost its value. Inventory is still very low and transactions are still closing quickly. The best homes that are well marketed, good photography, well priced are continuing to receive multiple offers within the first week. And we saw that in our days on market. One other piece that we always like to share as well, again, just trying to see, yes, we might not be setting new records, but in the month of July, the closed transactions percent of ask price was at 102.7%. If you listed your home at 100,000, most likely you're going to be closing somewhere around 102 to 103,000. Obviously, that's a super low example, but just for some context. This is the case across almost all of our price points here in the Milwaukee area, specifically in the $200,000 to $500,000 range. This has been between 103 to 105%. So we're still getting good value for our homes, and usually with some pretty sweet terms as well surrounding appraisal and inspection. So to finally wrap this all up, if you found value in this information I just covered here for the Milwaukee area, please subscribe and hit that notification bell button so you can get all of our content and specifically these real estate market updates. I want to make sure that you get the information you need to make a good, sound decision regarding your real estate. Also, please give me that thumbs up, put a comment below if you enjoyed the comments or if you've got a question, and definitely let us know if you want us to add more details in the future. Thanks again, and we'll be back next month with your local Milwaukee real estate update.